go get this box. It's got a bunch of family kind of like memories and stuff. So we bring out this box, and it's got so much cool stuff. It's got like what did it have? It had like this prescription that was written for my grandmother, and there was like her diagnosis. My grandma, Allah yarhamullah, she passed away due to oral cancer, and so that original script was there. It's a very moving moment, and like her wedding dress was there, and just all of these memories. And as we're pulling them out, we see an envelope with my grandfather's handwriting on it, and it's just a grocery list. It's not a big deal, it's just like it's a couple of eggs and this and that. And we open up that envelope, and there's like a couple $100 inside. And
so welcome everyone to another episode of Chaka Talk. Assalamu alaikum. We have with us today Omar Yunus, who is self-described an idealistic American law and finance graduate who has spent his entire career in Islamic finance, which is very unusual for an American. He has worked for VCs, managed about 100 million euro of funds, and developed halal market indices for stock exchanges. Today is his birthday. Today's your birthday.
It is.
How old are you?
41.
And he enjoys eating Cinnamon Toast Crunch despite being 41 years old. Thank you, Omar. Tell us about yourself.
Yeah, thank you so much, Jazakallah khairan. First of all, for inviting me, and many thanks for this is our second conversation. The first one was excellent, so I thought, hey, why not record the second one? Though I looked at my notes for the previous conversation, and it was like very brief. It was like, these people are great, and then that was it. That's all I wrote, and then I was like, it must have been. It was pretty early for Afterfund at the time. So I'm a Midwestern kid, born and raised in Peoria, Illinois. Which is in central Illinois, if you're not familiar with the great city. And by the way, if you're interested in starting a company, a startup, Peoria is a great place to be. Low cost of living, decent markets, access to much larger markets, great network, IT, and so on and so forth. Anyway, that's my pitch for Peoria. They also have an accelerator out here through the Generator Group, this Distillery Lab. So if you get a chance, come on out, give them a try. Anyway, born and raised here. I have a background. I guess you could kind of describe my professional and my educational career as a series of choices that maximized my parents' anger. If we're being perfectly honest, so it started out. I went to school in the hard sciences. There was like this automatic med school program that I was successfully got into. And I told my parents then that I wanted to go to law school. They're like, okay. So then I go to law school. I thought I was going to do patent law. On a whim, during my first year, I did this, what do you call it? Like this kind of, I guess, like an internship sort of, for an Islamic finance startup. I worked in their legal department, and very quickly realized that like this is what I have to do. Like this is it. Like I have to be in Islamic finance. And so then I took a year off of law school working there, and like gradually, like the anger is building, like their patience is reducing. And then I took a job. Then I finished up law school and took a job in the middle of Europe, backwaters of Europe, Sarajevo, Bosnia and Herzegovina. And now like fever pitch anger. But alhamdulillah, everything worked out. Worked for a PE fund out there. Also, that's where I got that experience with the stock exchange. Absolutely fell in love with Islamic finance, and if I don't know if we'll get a chance to touch on it, but I genuinely believe that it is the missing piece. It is the final piece for building an alternative modality for Muslims in the U.S. and also abroad, a genuine Islamic finance system. And I think both Takadao and Afterfund are looking at different pieces of that puzzle, and inshallah we're gonna slowly build and slowly get there.
So to touch on what you just said, so you said you worked for a PE fund, and this is in Bosnia?
We'll be right back after the break. Tekka Talks brings you stories from around the world that will help you understand how crypto and Islamic finance can change our lives for the better. Subscribe and follow us to keep learning.
Yeah, Bosnia and Herzegovina. It was through BBI, Bosnia Bank International.
Okay.
Bosnia Bank International at the time, its major shareholders were a couple banks in the GCC and the Islamic Development Bank. Now, Bosnia is not
So
a
it
member.
wasn't Islamic bank then.
Right? Yes. Mm-hmm. All my entire career has all been Islamic finance. Career to be clear. I've taken on jobs, different small legal jobs and stuff like that, and I've done some gig work also in the legal and finance. No, only in the legal field, and all of that. Some of that has been Islamic finance, not all of it. But I had to go abroad because at the time the only kind of Islamic finance work that I was really familiar with or that was available was through like selling mortgages, guidance residential and that kind of stuff. And Saturna Amana, which was basically the only shop in town in those years, they didn't have a lot of openings, and that wasn't my area of specialization anyway. So yeah, I've typically worked in more opaque markets, private equity. I also did some work in venture capital. So after being in Bosnia, I got recruited to work at a VC fund, also Sharia compliant, also focused on not necessarily Islamic finance only, but we did quite a bit of work in Turkey, and then after COVID, moved to a UK again, Sharia compliant PE firm that was more focused on opportunistic investments in real estate. In London, where I'm still technically a partner, but I've taken a step back to focus on Afterfund. So yeah,
Okay.
throughout my career, yeah.
So your focus area up till recently with Afterfund, your focus area has been in private equity and investing in general.
Yeah, investing generally, and I would say that my role at Afterfund has also continued with that. I'm typically more focused on the finance and legal questions that we engage with. Though I'm definitely on a day-to-day basis working with Janan, who is my co-founder, Janan Ganic, really cool guy who I actually met in Bosnia, of all places. So when I was
Wow.
working at BBI, he was just a kid. I don't know if he had graduated college, but he was maybe either graduated or close to graduating. He had come up with this company, and he came and we kind of hung out, and I tried to help him with a couple contacts, and then we stayed in contact after that. It was five or so years ago, a long time ago, and alhamdulillah, he had an exit with that company. I mean, he did incredibly well. And then maybe a couple years ago, him and I were talking about what kind of things do we want to do, what kind of, because I knew I wanted to try and at least try something and put something out there for the community, something that we knew that the community needed, not just in Islamic finance but in a broader sense. And this is the idea that we came to after fun.
So
Yeah.
so we're gonna get to talk about Afterfund in a little bit, but
Sure.
before we get there, I want to hear your experiences in the PE world and investing world, considering that your focus was Islamic finance. How is it different from, let's say, the regular non-Islamic investors?
Yeah, I would say my experiences are very different from what a lot of people would consider to be PE. First of all, in Islamic finance, there's limited leverage, or if there's leverage being the use of loans. So I think the most famous use of PE is the RJR Nabisco kind of barbarians at the gate example that a lot of people know about, and that's the leverage buyout. So you take on a ton of debt, you buy a company, and then you do stuff with that company to increase its value. And the bet that you're making is that you will be able to increase the value of the company far more than and quickly enough, such that your interest payments on the debt and the principal of the debt do not overwhelm you. So you do use some debt, or sometimes you structure some stuff through debt in order. Yeah, actually, let me not get into details, but you do use some debt. That's not how a lot of Muslims would prefer to do it, and our investors are also very sensitive to that. I think that's one major difference. I guess the PE fund that I was doing, there's a lot of different strategies. There's, leverage buyouts. There's a roll-up strategy. I did some work with that. Actually, when I was working with the VC, we did something called a value chain strategy in Bosnia and Herzegovina, where we did from seed to table, created an agriculture company, for lack of a better word, ecosystem, business ecosystem, so that we could provide these incredible opportunities for the country to grow and develop its own agriculture kind of companies and economy. And what was really cool about it is that it's a small enough country that I could see my work like show up on a shelf, and I could see people's lives change. And this to me was what I had signed up for Islamic finance generally. Islamic finance, it's about sharing risk at its core, and I have a whole story about that. But it's also about being a stakeholder and maximizing your understanding of all the stakeholders and trying to fit that into a meaningful, kind of like helpful, generative business plan for the community at large. Anyway, sorry. So I would say those are the major differences. We don't work as much with leverage, and then the strategies that I've used thus far. Well, I've also done something called vulture capital, where we take. Pardon?
Oh no, I was just laughing. Vulture capital.
Yeah, where you take on companies that are on their last legs, but oftentimes for reasons that have nothing to do with the actual value or the underlying value of the company. So, so one example, I can't give too many specific examples because now we're moving into stuff that's covered by an NDA. But basically, there are companies that, for political reasons, could not exist in certain countries. But the underlying company itself was great. So you switch up a couple people, make sure that they are the right, fit for that political regime, and all of a sudden, hey, you're making money again, and you can do very well. That's not again. That's maybe not. I don't know how typical that is. The stuff that I've been doing most recently is actually it's pretty common. So you take an opportunistic real estate investment means there's a patch of ground and a lot of regulations, and then you get through all that stuff and you build something, and then away you go. So yeah, that was the stuff that I was doing just prior to Afterfund.
Yeah.
Again, being Sharia compliant means you don't take on, well, you structure your leverage differently, so it's a different type of debt that you take on if you take on debt, and by far most of it is based on equity.
Okay. No, this is very interesting. I was at the FII in Riyadh. It just happened last week sometime, and I was watching this panel with
Okay.
Mohammed Al Abbar, who is like I think he's the president, like the founder of Emaar in Dubai, which is like a huge real estate company. And he was sitting there, and the panel was called something to do with the bubble of the commercial real estate industry, right? And then there were a bunch of different commercial real estate, basically hotshots, sitting on the panel with him because this is FII, and they were talking about how the rising interest rates have essentially become such a problem for the industry. And there's this guy, this Emirati. He goes, I don't know about you guys, but we're not affected by rising interest rates because
Right.
we generally don't deal with interest rates at all. And he was trying to say, we don't really use debt. We tend to buy our stuff with hard assets. And I was like, this is so cool. This is such a perfect example of why Islamic finance and why, following our principles in regards to staying away from interest actually helps in the real world. Because as
Right.
soon as that interest rate starts going up, which is what's been happening, look at what's happening. Everybody's like, oh my God, we cannot do this. The industry's going to crash. There's a bubble, there's a bubble, there's a bubble. And here's a guy from Dubai is like, nah, nothing. It doesn't bother
Right.
us at all. Yeah.
Totally. So
So that's very cool.
That's a beautiful observation. I would say that if you don't work with debt generally, then totally that's going to work out for you. The whole financial world is interconnected, and so even if you're taking on Sharia compliant debt, they are affected by Euribor and LIBOR, and these are the interbank interest loan rates.
Yes.
And so
Yes.
this forms the basis of interest rates all over the economy. And if you're borrowing money from the government, or if you're borrowing money from whatever sort. If you're borrowing money from maybe anybody except an investor who cares about this kind of thing, well then that interest rate, no matter how it translates itself structurally in an Islamic finance sense down the line, that's going to impact you. It sounds like the gentleman you're talking about, he didn't need it at all. He had pure equity investors. And the problem with that in PE is it kind of puts you in a little bit of a disadvantage in the sense that you can't. I feel like this. I'm getting too far down the rabbit hole, but just I'll wrap it up. I'll tie it off. That in PE, there are advantages to leverages in the sense that equity is a little bit more expensive, and so your upside is then limited if you don't have access to leverage. But overall, it works better for everybody. Everybody's interests are tied well. And I do think that there is a healthy mix of debt and equity because they create slightly different incentives. And there was a guy, Michael Gassner, who I worked with at BBI. He had this really beautiful presentation about why Islamic finance also needs debt because it creates a different set of incentives of disclosure. There's something called information asymmetries and so on and so forth, where it really helps level the playing field for both sides, and it helps everybody kind of make sure that their interests are aligned. Anyway, I apologize for that. I know it went really deep down a rabbit hole there.
No, actually, it brings up a really important point. And I'm going to try to couch it in terms that are relevant for like the average guy. Okay, number one is you mentioned that the entire ecosystem of banking is intertwined in one way or the other. So whatever you do, you're going to somehow be exposed to interest, right? Now, this troubles most Muslims or Muslims who care about these things because you're like, well, how Islamic is Islamic banking? Now, again, I want to say very clearly that it is permissible by the scholars, and has been vetted by the scholars. So I'm not saying it's not Sharia compliant, but it is those kinds of questions that cause Muslims not to adopt Islamic banking because they're like, there's not really Islamic about it. That's number one. Number two, you brought up this idea of disadvantage. So I feel as Muslims, because there is this narrative that we are at a disadvantage because we don't take interest and we don't charge interest, right? And it actually, in the fiat system, it really is applicable because they keep inflating the money, and the money gets it printed because of these interest-bearing loans and these bonds and things like that. And we're not taking any of the interest, but our money keeps devaluing. So I feel that it's really that disadvantage. There's no level playing field for us Muslims in the fiat world. What are your thoughts?
Yeah. What do I want to say there? So, if you look at the early days of Islamic finance, you will see that the measures and the structures that we put in place now were intended to be, and maybe are still intended to be, a little bit more of a stopgap. That there's this idea, and I mentioned alternative modality, that we're looking to create our own system, a way of engaging with the world that is not based on interest. It's incredibly, as you had mentioned, incredibly hard to do. Even if you're not taking on debt, by the way, because so much is responsive to debt. Debt underpins so much of the economy, and it's involved in so many different transactions that it's very, very hard to get away from. So yes, I agree with you. I don't think that this necessarily diminishes. Where I disagree with Muslims who kind of like throw the baby out with the bathwater, that kind of thing. Folks have given their lives and put forward genuine effort to create as halal structure as is possible. In Islamic finance, we have to recognize is this tiny raft of halalness on an ocean of interest, right? And we're just floating on top of it. And so in that way, we're influenced by it. We're impacted by it. We can't. There's nothing we can do about it in the short term, as long as you're connected to the larger financial system. So yeah, I agree in many ways, and I understand where the conversation is heading. I think we're now going to start talking about decentralized kind of structures and this kind of thing, which I think have a great deal of promise and can do a great deal of good. And I think I think the response from much of the scholarship to date has been maybe not as as well versed about what's going on as maybe could have been done. But anyway, looking forward to that discussion. So in short, I certainly agree with you. I see where you're going with it, and I agree with you. It's really hard to get away from.
When it comes to TradFi, traditional finance and Islamic finance, there's, like I say, there's a debate, and alhamdulillah, as long as we stick with the Jamiat al-Ulama, where they approve whatever has been brought to us. So thanks God, we're able to use a bank account, we're able to do transaction globally, of course, with a certain level of Sharia compliance acceptance. And it's up to the individual to choose what is good for him at the end of the day. But, there's no, of course, there's so much to be done still at this level, because, as you mentioned, we need to build more and more product to kind of bring the traditional finance, Islamic Sharia compliance product into life. And it's happening, actually. There's a lot of effort taking place within this traditional finance to make it even more and more acceptable, and moving to the step of great adoption, with people who want to have a halal loan or whatever. But now we are looking at, as you just mentioned, we are looking at the new technology that are taking place. Digital currency, cryptocurrencies are taking place. New technology, blockchains, smart contract. All these new things are coming into the plate. I would say not only of the Muslim, but the global population. And one of the main reason why this new technology are coming, and when we talk about decentralized ownership of your own content, ownership of your asset, ownership of your cash, it shouldn't be difficult for people to own their own money, and it seems to be difficult still today. So you see that the trend with the people in general globally, Muslim or non-Muslim, they are trying to be more independent, and they want to take the ownership of whatever they own, whatever they have. And you see this trend of new technology shaping the world today. That has been one of the reason, the 2008 crisis, one of the main reason of the drives of the population trying to say, hey, our system is broken, financial system is broken, we need to find solution. Having said that, of course, as Muslim now, we have seen this technology being in use for the past 13 years, blockchain, so on and so forth. We are kind of like stuck with a traditional finance that is very troublesome for us, because we don't see much of a way to escape the riba system. It is always embedded somewhere and stuff like that. Now we see this potential, or this new technology that could be a big shift for the Ummah and for the Muslim. By the way, they were the population were the least moving forward to this new technology. We seem to be always waiting for things to happen among general population before we step in.
Surely.
Okay, and there were a lot of restrictions for good reason, or bad reason. Some people say, well, it's to protect the greater, maslaha of the population. They don't want to be scammed. They don't want this. So now that we have this new technology that can kind of reshape our, Islamic finance condition, what's your take on that? And I mean, you're building now a Waqf. Can you share a light on that, and how we heading basically?
So I guess the question is, what direction do I think the Ummah is heading, and maybe within the context of blockchain itself,
adopting to this new technology and using it for the betterness of our community. So what's your vision? You've been talking to people around you. I'm sure you hear things. So I want to hear your feedback on that.
In many ways, it's generational. And so I think folks of my generation are very much open to it, and younger folks are very much open to it. Whereas folks of the older generations, as maybe you may have mentioned here, is they're a little bit more skeptical. The scholars I talk to basically have, for example, stuff like with Bitcoin, because that's the most commonly used, or at least the famous, most popular, is that Islam has a pretty clear view of what counts as a currency and what counts as an asset. And I think the major issue that scholars have currently with, like, let's say Bitcoin, is that while there are claims that it is a currency, it's essentially being used as an asset. And we can just go into a currency in Islam, in an Islamic sense, is just a medium of exchange. It's just it's a way to transfer value. And its value should only be the nominal value of the currency itself. Whereas if you take on an asset, the idea is that that asset should appreciate in value or depreciate. In Islamic finance, appreciate or depreciate. And so a lot of people, for example, will just take on Bitcoin not because they want it as a medium of exchange, but only as a store of value. Now, a store of value is certainly a function, but it's not the main function. So when you talk to Islamic scholars and you talk to them about Bitcoin, which is where a lot of the conversation happens, I think this is where a lot of them get stuck. But the upside to this, and really what that comes down to, in my opinion, is adoption and folks getting on board with it and using it as a medium of exchange, whatever coin you have, or taking other measures. I think IDB. I just recently saw an article that IDB had partnered with a firm in the Netherlands to create an algorithm to help stabilize the value of any sort of cryptocurrency, so that they're automatically buying and selling or using that cryptocurrency with the algorithm to help stabilize its value. I just want to just briefly get into why that's important. If today, and to talk about this idea generally, just very briefly, or at least from my perspective, you guys certainly know much better than me. But let's say I want to buy an apple today, and the apple costs $1. Okay, no problem. So I give $1, and when it's US dollar and many other types of currency, that apple will bounce around $1, based on supply and demand. But when you're using a medium of exchange that is not stable, tomorrow that apple could be worth $2, and the day after that it could be worth 50 cents, and that's because the value of the currency itself has gone up and down, and that is because people are maybe not using it in the way that you'd want a currency to be used. So that's why IDB right now is working on that algorithm, which speaks to me of maybe a little bit of centralization, which maybe gets away from, but I don't know. I don't know the details of it. So I think that would be the critique of it, and the obvious answer to that is adoption and getting involved with it. That's one thing. The other thing is, because of the limited amount of these currencies, I think that they are ripe. I mean, there is some now. The SEC is now starting to come down on some of these some crypto as unregistered securities, which is something that I have a not so tangential kind of interface with, right? And the idea with these securities not being these being unregistered securities, and why that might be a problem, is because they are ripe for speculation and fraud, right? Even something as quote unquote large as Bitcoin still now is subject, at least when you, as an observer, to massive speculation, hoarding, then tanking the market. I mean, this is something, by the way, that has happened with fiat currencies. This is how George Soros made his money, by crashing the Malaysian economy, right? By buying up a bunch of Malaysian, I think it was ringgit, and then waiting, and then selling it all of a sudden, and then crashing their economy. So it's not that's not something limited to Bitcoin, but when or to cryptocurrencies generally. But when it's small enough and folks can buy up a bunch of it, then it's also potentially subject to manipulation and that kind of stuff. So I guess those are some of the considerations and concerns that people have with it. But I mean, I definitely see the value especially from an Islamic finance perspective. And there's no question. I mean, I had briefly engaged with IDB actually just right before the COVID hit, where we both had to change directions very quickly. But and December of 2018, I sat down with them and I was like, okay, here's the idea. It involved using blockchain and cryptocurrencies to help create a way that you could exchange debt in a halal way, which to this date has not been able. They haven't found a good way of doing it. Anyway, it's a longer story, but so I think there's a lot of interest in it. It's just that to get us to the place where scholars are going to be, and I think there are scholars who are really starting to come on board and starting to understand the value of it, right? Because a lot of the kind of arguments which I feel are non-starters, where they talk about, well, it has no underlying value. Bro, what do you think a dollar is right now? Like, what do you think a euro is right now, right? All the fiat currencies are basically the same thing. I don't know what. So those arguments are starting to go away, and now we're getting into a little bit more like, the meat of the issue. And it might take governments to get on board, which good luck with that, because which was the last government to get off the U.S. dollar? Was it Libya? What happened to them? Right? I mean, that's you don't pull off of the dollar or whoever or whatever very easily, because there's actual value in being a reserve currency and or any type of, or having any type of currency, and that value is one that those interests will defend. So there are geopolitical issues there. I mean, there are actual considerations in that transition. And I personally don't have a roadmap for it, but to maybe summarize and answer your question, I think scholars are slowly coming on board. I think it's a generational thing where older folks are a little bit questionable. Then there's, it's honestly, the Muslims that I've seen engaging with it are doing things that I would personally not consider halal. So, Allah has given us an incredibly broad and vast and colorful ummah. And certain parts of that ummah might help push us forward, where others might not. That would be the second part. So there's that niche of people who might engage with it. And the third is generational, that younger folks are not so colored and biased in their view of currency and what should be acceptable, and that they may come on adoption wise. As for me personally, it was something that I was deeply interested in, but these issues that I brought up are ones that I don't want to say keep me up at night, but there are ones that that give me pause and concern. Now I know that you guys take great steps to ameliorate these issues and others. And so I don't mean this as a critique of any particular company, but these are just general concerns and considerations. Yeah.
For sure. I mean, the way we look at it ourselves, we believe in the underlying technology.
Mm-hmm.
Okay, so blockchain is a perfect way actually to be used into tracking every single transactions and everything, and like streaming process as well. So that's why there's a big adoption, big push in most of the country today. So the underlying technology is there. Then smart contract, likewise, it's an amazing tools to actually have a digital contract that could be set up for any basic contract between two people, and without having those very expensive legal agreements that take place. So you could go with very simple agreement. We agree on A, B, C, D, and that's it. It could be auto-managed, auto-regulated. The code is the law and stuff like that. Then you look at all the technology that are coming and tied up all this new technology like AI, that brings some data point and repetitive things that reduce all the cost of data analytics and stuff like that, tied up to a blockchain solution. All this kind of new technology are going to be a mundane task that's going to be done by this technology, and kind of reduce a lot of steps that we're taking as human to do random task. For example, you want to manage a clear a transparent ledger for in the takaful concept, for example, you have to know how much is going back to the participant. Is a very difficult task to do that on the with hundreds of accountant and stuff like that. You can have everything lined up on the blockchain, and you know exactly which recipient participate at which amount, and the takeaway from each participant in this blockchain is open ledger, can be verified by everybody, by the government, by the individual, by entities. So all this transparency brings a lot of trust into your own business, because now it's all about trust. For example, something that I challenge all the time is like the charity businesses. There's no transparency, and even the halal charity businesses, you never understand what's happening behind, around, and people are getting upset. And I don't want to go into the debate of the charity things, but it's happening a lot that people are really annoyed because there's lack of transparency, not because of the institution or the charity holders. It's just because they don't have the tools to make it more transparent. They don't have it. So they're going to say, okay, I want to do a legal DD, I want to do a financial DD. It takes too much time. Put it on the blockchain, Habibi. That's it. Why are you resisting this beautiful change? You should people should go into more transparency. That's one thing, to look at the technology. The other thing after that, of course, to transact into those technology, you're using, like they call crypto, or I would call it digital currency. Actually, my existing bank account now is digital. When I transact between my bank and I send you money, you into the US, do I see the dollar? Do I see the cash? It's digital currency somehow. You call it a crypto or whatever. It's I don't see where is the big feast. The big feast is what? There's a bunch of people globally who own the printing press, and some the country, they have some kind of power to actually control the liquidity, and they need sometimes is at the end of a new government taking position, and they're like, we need $100 billion to do whatever, especially the US. And they go say, yalla, what do we have to do? Just print, and let's get it done. So now they have an issue with like not having control of our resources, our crypto, our money, and stuff like that. So this kind of changes, big shift that are happening, is putting some people into trouble. But if you look back at like I say, if you look at the technology itself, even themselves, they're like, oh, we need this tech, but we don't like the crypto part. So, I mean, it goes hand to hand. If you say no to technology improvement, so you say no to the rest. So, and they are going, so that's why it's confusing. But what they are okay with is launching the CBDC. Okay, they're fine with that. Now, if they create their own crypto, so meaning removing your own money and giving you, that was actually one of the last called on the European central bank. Basically, they announced a big news. They say, oh, we are moving right into the crypto. Now they're going right into the CBDC and creating a digital euro. And they're like, oh, don't worry, you can still keep your euro cash, you cash euro, but you have an option now to have a total digital euro. So they're giving you this option, which actually freak out a lot of people because it's centralized. Now you have more control over the money. So they are just delays. So they are not okay with decentralized currency, but they are really okay with centralized. And that's scary, because if now they control your money, your digital euro, you have no more move class. Forget about it. Back then, you have still some cash. Some people, they have cash under the mattress, whatever they call it. They can still live with it. Now they have full control, and they are giving you, quote unquote, an option to choose between cash and a digital euro. CBDC. But eventually, they're going to put everybody back to the CBDC, and that's it. And it's going to happen for the US dollar as well. And then you have like a click of a button, you tweet something they don't like, you know what? That's it.
Yeah.
It's
Yeah.
done. So the brothers, they can do whatever they want in terms of, oh, we want to do like what they call it, boycotting of a certain
Oh, right.
country.
Companies and yeah.
Plus, yeah, Habibi, you're just gonna make a tweet for boycotting if you are tied up to a digital crypto CBDC at the government level. Your account goes back to zero in a split second.
Mm.
So that's why the push from a decentralized, independent economy, I would say, it's a must for everyone, because we're all going to be at the mercy of khalas, zero to whatever your account, that can happen. You see?
So I first of all I understand. Well, I don't want to say I understand, but I certainly hear your arguments. I do not. I am not so well versed in the decentralized versus centralized currency arguments that I can have a ton that's meaningful to say. But I can reflect maybe on what I understand about markets and people in a financial animals generally. And this is probably the traditional talk. Thought on this, that comes from, university economics and so on and so forth. Our entire financial system, when with fiat currency and just generally, is built on trust. It's the idea that this dollar, when I take it to the bank, I'm going to be able to get it the next day. And even if the bank fails, the FDIC has insured it. Okay. Now we both know that there's a ton of problems with that, and that kind of system actually just means that that dollar is going to be worth less over time necessarily because of printing of money and debt, and so we understand that. But the person that we are trying to convince about these types of issues looks at institutions, and they feel trust in institutions. In an older generation, a one that grew up like in an analog era, and even before there was anything like televisions were any sort of clarity, definite, had any sort of definition, so on and so forth. Those folks, what you're asking them to do is substitute trust in institutions for transparency and trust in technology, right? Right. So
Yeah.
right. So
Yeah.
I think that's the baseline
But
argument,
yeah,
right?
I got you. I got you on that level. What is they either live in another planet, because you don't need to go further than Lebanon, Turkey, Egypt now. So this so-called trust in the institution,
Right.
when you see the depreciation, you
Right.
guys in the US are like, you don't see it coming in your face right away.
Right.
Is a delay effect.
Sure.
Is effect. So they don't see it, or they're in denial, because they, as you mentioned, some countries are completely wiped off. You look at your neighbors in Latin America,
Oh
El
yeah.
Salvador, El Venezuela. They
Argentina.
went from hyperinflation. So
Yeah.
again, this institutional money. Now, if you come to me say, oh, dollar is still king. Yeah, of course, dollar is still king. For how long? For how many, but
Right.
how much time? But
Yeah.
the funny thing is not that, is if you want to see the institutional fall, imagine the Lebanese going to the bank and saying there is no money. Whatever you have as a paper
Right.
is as good as a paper to not even start a firewood fire. Is useless. Burn it is better.
Right. Right.
So there's definitely something
Yeah.
happening globally.
I want to be
And
clear. It's
yeah,
not that I
yeah, yeah.
disagree with you. I'm just saying that that's the hurdle that you have to overcome. And I mean and the people in charge now who are slowly retiring. I mean, these are the same people who are like, I can't open my email, right? So their trust in technology is like not super high. You know what I'm saying? Or I got a virus from clicking this thing. They're like, I don't know what's going on here. I'm
You
going to the
talking
bank.
to the acquired. I'm one of those guys who cannot even open the email, but still I make the effort to
I know.
go.
Yeah. I I want to be clear. It's not that I disagree with you. It's just I'm just speaking from like what's the activation energy? What's the hurdle that you have to clear to get a lot of folks on board? And
Well,
yeah.
the good thing that you just mentioned is that is a question of trust. Is the good news when you look at some of the exchanges, how much you and me value it, and how can I trust you to send you some money, and you send me money, I trust you. That's why you have all this now, the centralized exchange taking place, also taking some kind of responsibility, even though I believe more in a decentralized network versus a centralized network. But you have all these things are happening, and of course they're getting a lot of backflat, getting sued by some countries, because they're like, oh, we try to protect the end user. Yeah, for sure, the end users need to be protected, but the main reason is they are afraid of the massive adoption of these things without them being prepared to come up with their own solution.
I agree. Yeah.
But the technology is there. People are trying it. People are going to lose. It's like people are afraid. They're like, oh, there's so many things are happening. Of course, during the time of the internet, many things were happening, and a lot of scam were happening. And they will happen. But when you look at the amount of scam, I was talking to one guy who was telling me, you know what? There's more scam in the credit card business than in the digital space, crypto space. But you know what? Because of the high fee that you're paying on the credit card fee, that pay for the scam amount to cover the industry. Otherwise, everybody will run away. So the high fee that you're paying for so they managed to say, okay, we're going to pay, make sure you pay a high fee to avoid, to cover all the scam that are happening in the credit card. Every day you go to your internet now, you buy an airplane ticket 5 minutes ago, you have to shut down your credit card because somebody took $1,000, $2,000,
Sure.
whatever. So these scams are existing, but what they did, they police themselves, they put a charge, and that we don't have yet this kind of sophistication within the crypto space. If now I say every transaction you do will charge you on the crypto space 2% to cover the scam issue, we'll solve the problem with we had a scam there, we need to pay this guy because this happened. You see where I'm coming from?
I do. No, first of all, I just want to make clear, it's not that I disagree with you. I just want to kind of talk about.
No, you're fighting with me. Yeah. You keep on fighting, going back to your things. I'm sorry to say that. You see, you agree with me, but you disagree. That's the thing, Omar. You're stuck into you're like 1,000 years old industry. No, I'm just joking.
No, it's all right. I look, I hear you, and I definitely see value in it. There's no question about that. There's no question about that.
Yeah. I want to jump in because we have gone 45 minutes and we haven't said anything about Afterfund. And this is the reason why we're having this call. So I want you to tell me, Omar, why did you start this company and what does it do?
So the why is a great question. For me, there was like two stages to why. There was this idea, Janan's story for Afterfund, which one day maybe you can talk to him about. Janan's story for Afterfund started before he started Afterfund. So he had an issue with where his charity was going, and he was unhappy with where his charity was going. For me, it was like it started out as a much more abstract thing that the Waqf system was something that underpinned Islamic civilization. And in the same way that I believe that Islamic finance is necessary for us as a community and an ummah to grow and to really realize our potential and to give something back to the world, I thought that the Waqf system was equally necessary to rebuild our civilization and to become contributors again. I believe that. And that's why I started. But it was in the middle of it was a couple months in that that something just really kind of it really touched my heart and really put me all in on it. And it passed the exploratory stages. And after that point, we started accepting donations, and I knew that this was going to be the story in one way or another for the rest of my life. We were sitting around our kitchen table. My family's all over the world right now. My sister's like in the UK. My brother's in Los Angeles. I used to be in the UK and in Bosnia, but I'm here now with my parents to try and keep an eye on them, make sure they don't get up to too much trouble. And so we're all sitting around the kitchen table, and one thing leads to another. My mom's like, "Oh, go get this box. It's got a bunch of family kind of like memories and stuff." So we bring it up.
We'll be right back after the break.
We believe that the financial system is broken and that our banks and insurance companies don't have our best interests at heart. We've built Techaturn to help us get together as a community to save, earn, and access credit. Join us today and discover how you can grow your savings while helping others.
This box, and it's got so much cool stuff. It's got like what did it have? It had like this prescription that was written for my grandmother, and there was like her diagnosis. My grandma, Allah yarhamullah, she passed away due to oral cancer, and so that original script was there. It's a very moving moment, and like her wedding dress was there, and just all of these memories. And as we're pulling them out, we see an envelope with my grandfather's handwriting on it. And it's just a grocery list. It's not a big deal. It's just like, it's a couple of eggs and this and that. And we open up that envelope and there's like a couple $100 inside. And what we kind of collectively realized is that money had just been sitting there. My grandfather had died, 20 years ago. That money had just been sitting there doing nothing for him. It was brutal. It was like a terrible feeling. And, my mom was like, well, we should donate this. And my brother was like, or it might have been my sister. I think my brother was like, yeah, Omar does that. That's what he does, and so when I say that my blood is in this, that my family is in this, that's what I mean. We took that money and partially because of this, we've created an asset. I don't want to jump too far down that, but we now have a way that you can give sadaqah jariyah for those who have passed away, so that they can create in perpetuity good deeds for themselves even after they passed away. That's a real application. That's when it became a part of me. It wasn't just an idea. It wasn't just for Islamic finance and for Muslim civilization and for the Ummah. That's when it became, this is a part of me. This is part of my DNA. So what are we talking about generally? Afterfund is a digital donation platform that allows a donor to create a donation that goes in perpetuity. That one donation can make a 20 or 30 times greater impact than it would through traditional means. And the way we do that is with something called a waqf or an endowment. And that just simply means we take a donation and we invest it, and then the profits are continually used for a cause. I want to be clear about that. For a cause, not for a charity necessarily. Charities are stewards. They are vehicles of causes, but we are focused on the cause itself. And that's the understanding with the charity. In a nutshell, that's kind of what Afterfund does. So we work with charities to kind of create funds so that single donation can support that charity and that cause over and over and over again. Let me just give you a quick example, because we just partnered with these folks. They're called Bani. And the reason this is so interesting is because it kind of shows the traditional versus the innovation in the space that we've come up with. So the traditional way of doing a waqf or sadaqah jariyah is like buildings, institutions, and wells, water wells. Well, Bani builds water wells, okay? Bani goes to Pakistan and they're building out to different parts of the world. They're based out of Michigan, do a lot of work in Ann Arbor, fundraising in Ann Arbor and Go Blue, University of Michigan. I met them at ISNA. Really great dudes, right? And so what they do is they build water wells. Well, now instead of, let's say that water well, for whatever reason, climate change, tectonic shifts, etc., that well goes dry. If this was a traditional waqf, then that means that the good deeds, now Allah works in whatever way He works in, and so maybe it doesn't work exactly like this, but literally speaking, that good deed has gone dry, right? What we do is we create a fund, and that fund creates new wells, so that even if that one well goes dry, we can say, hey, no problem, we'll just fund the next one. So it's a good deed machine that keeps creating more and more benefit for a given donor, right? And to me that concept is so powerful. Now, to the best of my knowledge, we are the first perpetual endowment fund designed for wealth. So that's just like a small thing that we've done in that space. But now we've done it just in a way that it's like way more accessible also, right? So people, especially of our generation, millennial, but anybody is open to this sort of thing. They can come in and very, very easily find a cause and support it in perpetuity. We've digitized and modernized what was a very beautiful traditional model based in the Sunnah. At Khyber, and we wrote an article about that on Medium, and you can check it out. It's a beautiful story about Omar and how he took a date orchard and made it into essentially the first waqf. So yeah, alhamdulillah, that is the idea, that you just take one donation and you make it into something that can go on and on and on, and you do it in a way that, and I think you guys will appreciate this, is decentralized, is made to be anti-fragile through not being fixed on necessarily one charity, where that money will be working for that cause in perpetuity, or until, inshallah, that cause is no longer needed, maybe one day, inshallah, and then can be shifted to other similar causes. So yeah, that's the idea behind Afterfund.
So where are you at now with the project? Where are you sitting now?
Oh man,
did you launch?
So so we started out with this pilot program, right? And we didn't do any marketing with it. We just like put it on our LinkedIn, and that's maybe where you found us, or maybe where I found you. I forget the origin story there. Anyway, so we just put this on our LinkedIn, and then so we have the starter charity in Chicago. Basically, it's a masjid. They give food to folks in need, And so, okay, so we're like, fine, let's just see what happens. We were able to quickly create an agreement with them and work with them because they knew us. They're part of the Bosnian community. Bro, in just a couple of weeks, we outperformed them by 4 to 5 times per donation, online donation. We had 46% week over week growth, and we knocked the expectations out. We overfunded one of the causes. It was a Quran class, a Quran kind of teaching. We overfunded one of our causes. We were just like, oh wow, that's actually too much money for this thing. The point I'm trying to make is, where we're at is the adoption has been off the charts. People are really excited about this from a Sadaqah Jariyah perspective, and there's a fatigue in seeing your donation just get burned up, right? And when you talk to charities, this is something that's actually happening. I'm not saying, put aside any sort of idea of fraud or mismanagement, because I think 99% of folks are not like that. They may not be sophisticated. They may not be taking the notes that they need to take and keeping accounts, but they're not fraudsters, right? But if they get $200,000 more than they need, then they're printing off a bunch of pamphlets because they're not sure what to do with it, right? Whereas, for example, we create a buffer fund sometimes for charities to help them take that $200,000, and maybe you don't need it today, but now it can grow, and there's a disaster, and God and yeah.
So on that level, so what's your transparency mechanism and stuff like that? Because even though we say that the guy doesn't wake up in the morning just to be a fraudster, for sure. He's like he's like trying to do his best, and he will have this and that, and then he has fees to pay, and he forgot to mention this to the community. Oh, I'm sorry, I need to pay my rent. I need to all these kind of things, or so you can move from a Hyundai to a Bentley, of course, depending on what you drive. He's driving a car. Fine.
Yeah.
Again, where do you bring transparency, support in order to say, hey guys, this is it, this is where it is? I want to hear about that.
Yeah, well. I love that question. So there's a couple of ways we do it. You talked earlier about smart contracts. Unfortunately, we still use the old-fashioned ones. So we have a series of contracts that give us a right to access information about A, how the money was spent, and B, how many people were helped through the funds itself. Which means we have access to receipts. we have access to ledgers and their books and so on and so forth. Second, we only worked, and so this is another traditional structure. We only work with U.S. registered 501c3s. The U.S. government itself has certain standards of transparency that they require, and certain standards of reporting that they require yearly and annually. And then the third thing is a little bit more of a an AML, anti-money laundering type of thing, where we check, make sure our partners are not on any sort of OFAC list, which is like a list of prohibited folks that you can't work with, because we do work with some international charities and stuff like that. So I think those are the three major ways that we try to do and try to engage with our charities. Up to this point, these have been agreements and folks that we know deeply and personally, so that if they now Bonnie is a new series of charities that we're about to launch, where this is not the case. We didn't know them deeply before this, and so we're relying on the contracts and these other things to help us move forward. But Bonnie has a great reputation on its own. I mean, they're doing incredible work. Putting that aside, we knew the folks that we worked with, and them mismanaging the funds means that the Bosnian community is not a very big one, and so you mess with somebody, and then the whole community knows, and that's not something that they want to engage in. They go door to door asking forgiveness, from their family and friends, type of situation.
Yeah, I actually have a question. So, the idea of the waqf is very powerful. So I would like to know. Well, first of all, I'd like to clarify my understanding. If I understand, so if I donate $100, right, that $100 doesn't go directly to the charity. It goes into a fund that generates profits. And then the profits is what goes to the charity to do whatever it is they need to do.
So let me just take a quick step back. So all of our donations are tax deductible, right? So to be clear, and I think this is a great sister. This is a great way of analyzing how we work functionally. So we'll say follow the money. So where does the money go? So inshallah, somebody comes to our website, or they on mobile or something like that. They come to our website and they make a donation. That donation actually goes directly to the charity. The charity itself, so now it's tax deductible. The charity itself then transfers it to 100% transfers it to an investment account. That investment account is generates profits, and from those profits, the charity is supported.
Okay.
That's exactly right. Yeah. So the second half was correct. I just wanted to clarify the first half.
Okay, so then that money sits there, and is there like a shelf life? Meaning, does that money eventually get released and used by the charity, or does it just stay there until that charity either shuts down or goes forever?
Yeah. So this is a great point, and this might be getting a little bit into the nitty gritty of our agreements, but that's okay. Because this is something that absolutely needs to be. So I think this taps into a larger issue of how we are kind of decentralized in a sense, and what that means, what that means for us. So our agreements attach to a cause, and the charity is a steward, is a manager of that cause. So if the charity can no longer engage in supporting that cause, then they agree to transfer that waqf. They're contractually bound to transfer that waqf to a charity that does do that cause, until such time, inshallah, that cause is no longer needed, and then we can then we will have to transfer to a similar or a like cause. So I just want to bring this into a decentralization discussion. So from the perspective of good deeds, the idea is that it can't fail. You're not tied to a charity which can fail. So any one charity can fail, right? But now this fund can go to any number of charities, that so long as they're fitting within the criteria. And for every charity, we have a series of ideas on backups and other charities that we can use. We also have a mechanism to hold the funds, again with a nonprofit, to distribute them to other charities, just in case something catastrophic happens. So we have multiple redundancies in place from a charity perspective. But put aside the charity perspective, God forbid. So Afterfund itself is structured to prevent this sort of catastrophe, or in the event of this catastrophe, to ensure that the money that is donated exists in perpetuity itself. Here is the first thing. First, we have there's a considerable age gap between me and Janan. I'm well aware of my mortality, which is one of the reasons I'm doing this. After I die, Janan actuarially will, inshallah, be able to be there for the business, and so at least within a couple of generations, we're good in that way. One, two. Let's say that Afterfund itself, for God knows what, God forbid, some reason goes away. Well, that money is still diversified amongst the charities. And those charities still have an agreement between them and the donors, which we've arranged, one of several agreements, them and the donor. So it's not just that they have an agreement with us. They have an agreement with the donor that that money has to be used in a certain way, right? So even if Afterfund itself goes under, God forbid, even if Afterfund itself goes under, that charity then can continue with the funds. And if the charity has to dissolve, they have an obligation to move the money to somebody else who does the exact same thing. So with or without Afterfund, now Afterfund is an added layer of trust. We're a way of connecting with these charities, but that the structure itself, it amends itself to decentralization, spreading it out amongst a bunch of different charities, and even in our own structure. From the perspective of charities themselves, they're diversifying their donors. So they're getting donors who have never heard of them before. I'll tell you, our donors had never heard of the Chicago charity that we worked with before. Second of all, the charities themselves are creating redundancy in case of mismanagement or acts of God that happen to the charity itself. So that sometimes it's not that they do something fraudulently, they don't want to fund the thing itself. Sometimes people, charities are run by older people, they can't continue. No problem. We can help them move the money. So for charities, it creates decentralization and diversification of their donor group. For us, for the donors, it does the same thing. It's kind of like a beautiful story there.
No, that's fantastic. Okay, so my understanding is that you have basically two roles. Like the one of the roles, which is I think maybe the less important role, is that you actually fundraise for the charities, and you provide that layer of transparency, that trust. But the more important role then is you are actually managing the funds, right? And
Oh, yeah.
you are investing the funds and trying to generate a return on it. So what do you guys invest in?
Yeah. So let me just take a very quick step back and kind of just clarify a couple things. So yes, we fundraise for the charities. I view that as the more important part. We are not compensated for that, by the way. So the charities who come on our website, they don't have to pay anything up front. The idea is that the only thing that we can compensate ourselves with, the only way we put food on our table is by managing the funds. Okay. So then, yes, we have a separate company that manages the funds on behalf of the charity, and that and those investments are in several different things. All of them are public securities, basically, stuff that's regulated by the SEC. So our investment arm is regulated by the SEC. You can find us on FINRA. It's called Fountaindale. It's just an investment company. We invest in a diversified portfolio of equities, real estate, again, securitized real estate, precious metals, that kind of stuff. I would say, a registered investment advisors and RIAs, traditional mix of securities. Because we are regulated by the SEC, we don't have any crypto holdings. But I think it's possible that over time that as the SEC kind of gets its rules and gets that stuff figured out, it's possible that we work in that sort of stuff. We also don't do any sort of private placements or anything like that, because all of our investors, quote unquote investors, are retail investors. No one's large enough for us to do a private deal or anything like that, and that's not something that we'd be interested in the short term anyway. So yeah, that's and all of these are AOFI Sharia compliant. So that's the baseline of all of it. And I've worked in Islamic finance my whole life. I mean, it is my whole life. Inshallah, it will continue to be my whole life. So that's something that we keep an eye on. And our Sharia advisors are all people that I've worked with in the past who know me and who I trust, and I've seen them operate over the course of many years. Yeah.
I'm glad you brought that up because I was gonna ask. I was like, is everything Sharia compliant? And you said it. So this is
Yeah.
fantastic. I think it's an awesome idea, and I really do believe in the idea of the Waqf. As a matter of fact, we have a Waqf that we support as contributors. It's called the House of Wisdom, and essentially it's a Web3 based Waqf that generates income, I guess, through NFTs. And the purpose of the Waqf is to support Web3 innovators who are doing things which are Sharia compliant, essentially, or aligned with Muslim values. So I'm really very, very keen about this idea. And like you, I think this is a fantastic way for us to actually uh, and a pillar of the Islamic economy. Let's put it that way. So, final words from your side. Who or where can people find you? How can they contribute, and how can they be a part of your movement?
Okay, so go to afterfund.co, and you can make a donation. It takes like 20 seconds. It's really not a big deal. You can also create a waqf for your deceased loved one, something that I've done personally, and that we've recently added. And now we are coming out with the beta version of our dashboard, so you can see the actual impact of what you're doing. Stuff on the horizon. Muslims for Change is a nonprofit that is working in Africa. We're getting them. We're working with them, and we're also working with effective altruism, something that inspired us deeply and something that I deeply believe in, which is a movement to make sure that you maximize the impact per dollar. And this is all it really comes down to for a Muslim. It's getting the most possible good deeds, and honestly the impact difference is just ridiculous. It's the most possible good deeds that you can from each donation. So afterfund.co, go check us out, and please, by all means, if you don't see something that you want to support, or by all means let us know, because we are always looking to add charities and looking for trusted partners, of course.
And how can someone reach out to you personally?
Yeah, you can email me, Omar at afterfund.co. So OMAR. Well, Jazakumullah khairan.
Shukran.
And thank you all so much for inviting me. All thanks due to God, and also to my parents and my family, and everybody who's supporting me. There are so many people that help you out along the way, and I appreciate what you guys are doing here too. And I'm so excited about Takaful. I briefly considered creating a Takaful company myself here in the U.S., but the regulatory hurdles were ridiculous. So I think you guys are doing it the right way. I really believe in the stuff that you're doing, and may Allah continue to give you barakah and help you guys build something beautiful for our community. And we hope to support you guys too. Thank you so much. Jazakumullah khair.
Shukran. Jazakallah. Wassalamu alaikum.